Welcome to the Jill on Money Show. It's Tuesday, September 16th, and it's a momentous day. It is the first day of a two-day Federal Reserve policy meeting. And for the first time since last December, we are going to likely see rate cuts. And you probably don't remember this, but it was just around a year ago, last year, 2024, September, when the Fed began cutting interest rates. I had to look this up, Mark, but they had a half a point. That first cut was a half a point in September, two subsequent quarter points, one in October, one in December. So 1 full percentage point, 100 basis points of cuts between September and December of last year. Then the Fed went on pause. And then we know what happened next. There were a lot of policy announcements. There were immigration announcements. There were tariff announcements. All of those really pushed the Fed to the sidelines for a while. But now it looks like the Fed is ready to get up and start playing again. I was on Face the Nation on Sunday, and I was in a nice long interview with Major Garrett, who was sitting in for Margaret Brennan. And I think it's a good way to think about where we are in the economy, especially at this moment where we are expecting the Fed to cut interest rates. So I thought I would air this. And if anyone has a question about anything mentioned in the interview, of course, get in touch with us. But I think it kind of sets the table for what's about to happen over the next 2 days. So here is my interview on Face the Nation with CBS News' Major Garrett.
Everyone expects the Federal Reserve to cut rates this coming week. That's not a mystery. I guess the only mystery is it 25 basis points or 50 basis points? And if it's 50, how much more of a difference might that make?
Well, I think it's more likely to be a quarter of a percentage point, at least for this meeting. And remember, what is the Fed's job? They've got to keep into balance two big priorities. And these are big. One is to make sure the economy grows enough to create jobs for anyone who wants a job. And the other priority is to kind of keep a lid on prices to control inflation or deflation. Right now, if you look at the Fed's job, it's a real tough one because the job market is weakening at the same time that inflation is re-accelerating. Now, remember, we are not going back to scary post-pandemic inflationary surge, but inflation is starting to move in the wrong direction. But I think the Fed's outlook is, hey, it's the job market that is getting slower, faster. We've got to concentrate on that. I think they go a quarter of a percentage point rather than a half of a percentage point, at least to get things restarted.
Jill, the Federal Reserve Chair, Jerome Powell, frequently says the Fed and he are data dependent. That's probably a virtue, except when the data is messy and cloudy and full of conflicting signals. That seems to be prevalent right now.
Well, I think there is a real problem in that if you look at the last 5 years, our data is all over the place. The pandemic really did create a doozy of a problem on the economy, but also the way we track the economy. And, I know people got really freaked out about those preliminary estimates to the revisions to all that data for the 12 months through March of this year. That preliminary revision showed 911,000 fewer jobs than we originally thought. Now, this is always part of an annual process. We'll get the final number in February. But what I guess is important is there are so many different aspects to what's going on in the economy right now. The cross currents are really difficult. So yes, we know the labor market is weakening, but we're not seeing widespread job losses, thank goodness. There is no evidence that we are in a recession currently. The economy is growing, but we do have that niggling problem of prices starting to rise again. And I think that price increase because of those tariffs, because of certain aspects, even the service economy, I think that's a real cross currents. To be clear, the Fed, the amazing people who work there, the amazing economists that are out there doing the research, so many of them say to me, you know what? This is the most difficult time to judge the next steps of the economy in the last 40 years.
Jill, as you know, there's a phrase going around describing the job market, and it goes as follows. No fire, no hire. What does that mean practically for somebody in the job market or just graduating from college trying to break in?
Yeah, this is a very difficult labor market. I mean, granted, we are not like we are in a recession. We are not seeing widespread layoffs, thank goodness. There are pockets of layoffs that are happening in different sectors. We are seeing contractions. We're seeing people who are retiring and those jobs not being refilled. But I think that anyone who has a job right now, when I talk to HR people, they basically say to me, hey, you know what? Tell people to stay where they are. Don't fly off the handle. The job hugging, staying engaged with your boss, engaged with the company, very important right now. If you are seeking a job, you know where the jobs are right now. We see the most activity in healthcare, health services. So if you're somebody who is trained to do one job, try to find a job in the sector, at least that is adding positions. I might be a programmer and I might not have an ability to get a job at a big tech company. Maybe I go to a big hospital chain. These are the kinds of things we have to kind of get outside of ourselves. The adaptable candidate is going to be the one that wins in this economy.
Jill, let's talk about tariffs because it is a conversation and a way of trying to assess that this country has no recent experience with, at least 50 or 60 years of trying to assess what a tariff does when it is widespread throughout the global economy. So a lot of us are trying to get used to this. Economists are trying to get used to it. Policymakers are trying to get used to it. Our trading partners are trying to get used to it. What is the story of tariffs so far, and has it been fully written?
Nothing fully written. So very important here, because when those tariffs were announced in April and then they were moved higher and then they were frozen for a while, the tariff story was an uncertain one. I think it's that cloud of uncertainty that was really hanging over the labor market over the past 4 months. But right now, what we do know is that the industries most directly impacted by tariffs are not hiring as much. We know that. We know that they're losing some jobs. We also know that tariffs are creeping into the economy and not in a huge way yet. But what we are clear about is that prices are set to rise over the next, say, 6 months or so. Not great for holiday shopping, I know. But what we also know is that we consumers, we are very canny. Once those prices go up, we'll switch and make different choices. So that is why economists believe that this kind of tariff regime is one where we'll see prices rise, but not keep rising. Now, that doesn't really help you if you're going out and shopping. I understand that. But maybe the best news that I can have is that you're not going to feel like you did from the year 2021 to 2022, where it just felt like prices were going up, 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 up. It is likely to be that prices and the consumer price index, from the way that the Fed looks at this, the PCE index, these measures of inflation will start to rise over the next few months. Then they'll kind of steady. But the problem, Major, is that consumers are going to be stuck with price levels that are higher. And I think that is going to be very hard to swallow for anyone who's in the lower to middle earning category.
Joe, one other part of the economic scenario I want to discuss with you, because when people talk about inflation, they say, just tell me what energy cost is and I'll tell you what inflation is going to be. But yet there's a dual reality there. Natural gas and prices at the pump are down, but electricity paid for by consumers, either businesses or at home, are up.
Yeah, I mean, the great news is that prices at the pumps, okay, totally happy with that. Everyone's good. The price of crude oil sort of in the low 60s, no problem. That the electricity story is a story of artificial intelligence, because to build artificial intelligence, it needs a lot of energy in terms of electricity, or in the form of electricity. That's why you were seeing those prices go up. But again, what I have come back to over this process of the last few years, the last 5 years of all these different impacts on the economy, we've never been here before. And so what I want to try to emphasize is that we can't hang our hat on what has happened in the past. Right now, I can look at a lot of different companies and say, wow, these companies are making a ton of money. Big technology companies. We are seeing the S&P 500, the NASDAQ, the Dow, all at all-time highs. And you have to reckon that with the problem, the other side of that, which is consumers feel burdened. And I think that's going to be the story of this year and next. How will consumers get out of this? If the labor market weakens from here, I think that's a problem. If we see a resumption of growth and the labor market starts to strengthen, the average worker will be able to afford what's going on in the economy. But it does come down to that labor market.
Okay, so we'll see what they do. I think it's a quarter, could be a half, I guess, but it's going to be a lot of commentary. Now you have the basic outlines of what I think is going on in the economy. And if you can quibble with that, you may have a different opinion. You may agree with it. Doesn't matter. We're just going to have a lot of conversations about what's going on in the economy because we are in this murky transitional period. If you would like to get in touch with us about the segment or about something going on in the economy, but more likely something going on in your financial life, get in touch with us. Go to JillOnMoney.com, click the contact us button, write us a note. And of course, if you'd like to join us on the air, check the box. Mark will do everything else. Don't forget to sign up for the free weekly newsletter. Comes out on Fridays. And check out our subscription service. It's called Jill on Money Live. That's where you have access to quarterly live webinars, the back catalog of those webinars, including our most recent webinar on estate planning. We've got bonus audio and video content. It will cost you $45 for the next 12 months. So you can check that out. All right. Don't forget to lift someone up, change your work, change your wealth, change your life. Thank you for listening, and we'll talk to you tomorrow.